In stark contrast, the Bitcoin stock to flow ratio paints a different picture. So far, 18 million Bitcoins have come into existence, while 657,000 are newly minted each year. This gives us a stock to flow ratio of 27, which places the high scarcity value of Bitcoin in between silver and gold. How are the Bitcoins created? As gold is mined, so is Bitcoin, hence the term digital gold. Why are they mined, and who is mining them? Recall that the Bitcoin network is a marketplace for exchanging money in the form of cryptographically secure information encrypted with the SHA-256 in order to validate transactions without a middleman. So if there's no middleman, then who is validating them? Computers on the network known as miners. And why are they validating them? To get that bread. And how are they doing this? By solving a complex math problem, which is what Bitcoin mining refers to. Because after the solution to this complex math problem is mined, the winning miner is rewarded with Bitcoin. The work of mining is the only way that a computer can be rewarded with newly released Bitcoin, and so this is called proof of work. So after a miner is rewarded with Bitcoin, all computers on the network are notified of this, and then all transactions that occurred over the past 10 minutes in the distributed ledgers are validated, finalized, and grouped together into a block and chained to the blocks of transactions that had previously been verified in the blockchain since 2009 when Bitcoin came into existence. So this is how consensus at unprecedented scale is established in a bottom-up network without any central authority or middleman. Through the proof of work that Bitcoin was mined, because that is what ultimately drives consensus across each computer on the network in order to seal the finality of all transactions into the blockchain. So proof of work is how the network comes to consensus. Therefore, this is called a consensus algorithm. And that is how trust is embedded within the network to facilitate bottom-up peer-to-peer organization, because you can trust that the proof of work of mining cannot be cheated. There is so much trust built into the system that you are actually encouraged not to trust it blindly. In fact, don't trust, verify. Because Bitcoin is a public distributed ledger, you can verify the fate of each transaction based on its unique hash at a website like blockchain.com. And finally, you can trust that the flow of Bitcoin will be maintained at 12.5 Bitcoins per block per 10 minutes, corresponding with each block that is added to the blockchain. And there's icing on the cake as well. The flow of Bitcoin is cut in half every 4 years, and this corresponds with the reward era. From the beginning in 2009, each block rewarded 50 Bitcoins to the miner, then 25, then 12.5, and now within the next month, the reward will again be cut in half to 6.25 Bitcoins as we enter the new era. 2021 was just an estimate. This is actually happening in May of 2020, and you can Google this. This will continue every 4 years so that the curve flattens out and all 21 million Bitcoins are mined by the year 2140, which means as the flow of Bitcoin is divided in half, the stock to flow ratio and scarcity value will multiply by nearly a factor of 2. Does this mean the price of Bitcoin also goes up? This has been studied extensively. In this chart, we can see how the price of Bitcoin tightly hugs this black line, which is the price of Bitcoin calculated using the stock to flow model. And during 2012 and 2016, when the block reward or the flow was cut in half, the price of Bitcoin followed accordingly. This relationship is so tight that the correlation coefficient, or R squared, is nearly 95%. How do we know this relationship is not purely a coincidence? Because of co-integration, meaning even the differences between the calculated and the market values of Bitcoin tend to be stationary. Though it may not appear that way because the scale here is logarithmic. But this demonstrates that the two values are moving together and are therefore co-integrated. This article goes into more depth, so feel free to check it out. But with this correlational and co-integrated mathematical relationship, there's a pretty high likelihood that the market value of Bitcoin will jump closer to $100,000 after the next halving event in May 2020, usually about a year or so later.